Hello, it's Jim. In this video, I'm going to cover leverage trading. So this is one of the type of trades that I'm doing on my trading for me XRP bags, should we say. Now, before we start, there's two types of trading I cover on this Ads on Network page. Is spot trading, which is very, very low risk, very slow, can be very slow, but it's very low risk, and there's very less risk of losing your shirt, you would say. So, I mean, trading, before we go any further, trading is very risky. I think 95% of traders lose because they don't have any patience or they don't do any homework and what have you. So, if you scroll down this page, if you're not looking at this video on the network trading page, there'll be a link below the video, and you'll see here we've got some. There's the trading, the spot info. So we'll cover the spot trading on a separate video, and then we'll cover leverage trading on a separate video. Now, leverage trading, like I said, it can be very risky, but it can be very lucrative. And I would say don't play with what you don't want to lose, because if you don't know what you're doing and you don't, do your homework, you could lose your shirt very, very quick. So for this example, I'll use on our trading page, you'll find a link for, let's just have a quick look. You'll find the link for, I can't find the page. Sorry, here we go. You'll find a link on the page for Bybit. You'll see it over on the right-hand side, and you'll see a link to join Bybit there. Bybit is a KYC exchange. If you're wanting a non-KYC exchange, then we've got the BitUnix link over here as well. We use BitUnix for the copy trading, and some spot trading and a little bit of leverage trading as well. But either or. I think if you're looking for a non-KYC exchange, join BitUnix. That's a very good exchange. So for leverage trading, excuse me, the first thing you want to do is, what is leverage trading? Leverage trading is basically you're loaning funds from an exchange for a very low rate, and with that advantage, I would say, you've got risk. So what do I mean by that is, when you're making a trade, a leverage trade, you'll have your funds. Just an example, this is my margin balance. So I've got 221 XRP in the fund. That's my funds. That's what I actually put in there. But I put less in there when I started. But right now you can. The first thing you want to do is go to isolated, and you've got isolated, cross, and portfolio margin. I prefer on my trades isolated, which means each trade is individual. Okay, they're not cross-referenced with each. You might have 2 or 3 trades going. If you put them in cross, one's winning, the other one's losing. It sort of swaps funds back and forwards. Isolated is 100% definitely the best. Now, this is the important bit, the leverage. 6.5 x leverage is very, very high for me, to be honest. I normally do like 4, maybe 5 if I'm feeling lucky. But I seen an opportunity over here when I was looking at me heat map. If you don't know what the heat map is, have a look on the trading page. You'll see a video about the heat map. So I thought, why not? Go for a 6.5 leverage. Live wild. I would not recommend that too much. You get some lunatics doing 100x leverage, 50x leverage. You lose your shirt in minutes. Okay. So what is 6.5x leverage? Just an example. If what have I got in there? I haven't got any available balance because it's all in trade. But if I was doing a 6.5 leverage, you could do first a limit order, which is basically you would be telling the exchange what price you want to buy at. When it hits that price, it'll auto purchase whatever you put in here as your quantity and how much. And if you use that slider, we've got, let's just, because I haven't got any funds, it's not showing us. Let's just, 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 let's just because that's only based on what funds I've got in there. So you could do. I don't want to change it because I've got a trade in view. So 6.5 leverage. If you are, you say you want to buy a market price, which is basically the price as is, whatever it is when you're on the exchange. You're buying a market price, and then you use the slider how much you want to buy, and they'll tell you how much the cost is. That's what it will cost you. So let's just say you go to you move your slider, and it's a bit difficult because I haven't got any funds in there. Let's say I had available balance of 100 XRP. This is for Bybit. I'm trading XRP, and BitUnix I'm trading USDT. So for this video, we'll presume you're using Bybit. And then you move the slider over till it costs you 100 XRP, if that's what you've got available in your wallet. Now, what that will do is it'll loan you 6.5 times whatever you're trading, because you're doing a 6.5 times leverage. That sounds too good to be true, but what happens is, so you'll get example 6.5 leverage, so that would be 6,500 or 600 or 900 XRP, 6.5 times 100, so that'll be 650 XRP, I suppose. And then you would see here your quantity would be here 650 XRP, even though you've just spent 100, or you've loaned the 6.5 leverage, and you've put your 100 as collateral. Okay, so you haven't actually spent the 100 yet. So just an example, this is the trade, a leverage trade. So this is the value of the trade, 1,333 XRP. But I haven't put that much XRP in there, but there is a downside to it. I've put in the trade 206 XRP, 206.4, and it's lent me 6.5 times that amount, which is 1,333.76 XRP. So I'm trading with that amount. What that does is it charges you a fee, number one. Okay, so you've got realized profit and loss. I'm actually in profit there because this trade's busy, and I've been taking profits and take profit orders here, taking profits as they go up. Then this is what I'm doing. I'm not using huge amounts of XRP, a couple of hundred XRP, still quite a chunk, but I'm putting trades in there based on the heat map. I'm looking at where to enter and where to exit and what have you, and then I'm take profit orders. Over here, if you take profit over here, give that a click, make a take profit order. So just an example, I've said there, when it gets to $2.42, take 77 XRP off the table, and then basically it takes profit, little small profits off the trade. So as these are taking profit, they're going back into my available balance with the win, because I've won. I've closed part of the trade. And what I'm tending to do is in my trades is I just look for another opening to buy lower. So I'm taking profits as the prices rise, and then I'm placing orders as the prices drop. See, buy low, sell high. But because I'm getting a 6.5 x leverage, I'm getting more to play with, should we say. But there is a risk, okay? And this is an important risk, is the liquidation levels, okay? Now, the exchanges is not a charity. They are supplying you with those funds, and they're charging you a very small fee. Just an example, Bybit are charging you a very small fee. Every 8 hours, you'll see over here, the funding rate, the countdown. So in 23 seconds, 21 seconds, well, let's just see what happens in a second, but you'll see this funding rate will change. At the minute I'm in profit, because as I'm taking profits, it's already taken its slice of the fund, what I have to pay. It's like interest on a bank loan, if you can imagine. That's how I would categorize it. Just see if it's counted down. Just refresh the page just to see if the countdown changes. There's my lights going out. There, you see now. So it's 8 hours. So in another 8 hours, it'll charge us again, and that's just changed a little bit. Okay. So what that does is every 8 hours, it charges an interest rate on what you've loaned or borrowed from the exchange to do this trade. Because I've said I'm doing a 6.5 leverage. You can choose a 4x leverage, a 3x leverage. I would suggest starting very low, a low leverage. High leverage is bonkers because the way the market goes, you get a correction. Now, what that does is when it's lending you those funds, should we say, as the prices drop, if it gets too far down, the exchanges want their money back. They don't want to lose their money. So what they'll do is they'll make a liquidation level on your loan. And if that fund drops to a certain level, so if this drops down to there like a crash, and it drops to $2.05, I'll lose whatever I used as my margin. Whatever I've put in my margin, I'll lose it. I'll lose it all. So there is a risk. So if it goes up, you can take your profits, take your profit orders over here. If it goes down, put some stop losses. I haven't actually put a stop loss in here yet, but I will do. And stop losses, you got TP, take profit, SL, stop loss. So take profits on the way up, but definitely cover yourself. If you don't put a stop loss in like this, and I'll show you in a second how to do that. Basically, because there's no stop loss in there, it'll free fall all the way down to there, and I'll lose the lot. So don't do it. It's very important. So, like I said, the exchanges want to cover their loan. So they say, okay, if it goes down here, because if it drops, you're going in minus on your trade. I'm actually in profit on this trade, but it goes in minus. So if you're in minus and you've put 200 and that's what I've put in liquidity in the pool. The amount of margin required to open your position. So yeah, that's what so I've got 220 margin balance, but that's what I actually put in the funds, I think, at the time. Yeah, that's right. As the price drops, I go in minus. So it'll take, minus from there. But if you go too far minus, there's not enough to cover their loan, should we say. It's not the exchanges aren't giving you a gift. And this is why exchanges always want to liquidate the long positions and the short positions, and that's why liquidation levels happen. And that's when the sells of the liquidation, when you hear people saying about liquidation squeezes, long squeezes, short squeezes, and whatever, it's the exchanges liquidating the buyers and the sellers, the longs and the shorts, to get their money back or their crypto back or whatever it is you're trading with. So again, leverage trading, very lucrative. I would say leverage trading is very good for short term. But I'm saying short term, a couple of days, 2-3 days or whatever. But long term trades, do spot trading. Long term, you get. I've seen so many YouTubers. They don't tell you the whole story about what they've got in trade and everything else. Just an example there. I've got 3,138 USD in trade, but I haven't really. I've got how much have I got? $488. But it looks good there when you see I've got $3,138 in trade. I've loaned that much money, and I've put that much money as collateral for that loan. Interest rate is basically the funding rate, and that's what you realize profit and losses. Most of the time, you'll see on your trade it'll be in minus. If you win a few trades, take profits, you'll see it goes into green. So me trading fees are covered because I've took profits on that trade. Your unrealized is basically as your trade stands now. Right now, I'm 7 point. You see, that's changing all the time. That changes all the time. That's unrealized. That's just basically as is. If I close the trade right now by closing it by market, that's what I would be winning. If I was in minus, that's what I'd be losing. And again, this one's fixed price. This is the interest rate, should we say. I'm calling it an interest rate on the loan. I don't owe them anything because they've already taken a chunk when I took my previous take profit orders. And I tend to keep a trade open quite a long time because I take profits on the way up. And you can see there's a purchase order on the way down. I've put a purchase order here. So on the way up, take some profits. When they're clean, the funds go back in, and it's basically it's like compounding what I've started with, if you know what I mean. And I'll just give you an example. It's a bit of a waffle, this video. So that was the Bybit video. You're just looking at the trade you're just looking at now. So I had 33 XRP in December, at the end of December. So I carried that forward to January's trade. So I started with 33 XRP. Then I made a deposit of 50 XRP. Then I made a withdrawal, 23 XRP. Then I made another deposit, 160. All the same trade. It's just, I'm just literally playing back and forwards. And then I made another withdrawal, 45 XRP. So there you see the whole trade. This is what I deposited. This is what I've withdrawn. This is what's in trade. That's my profit, 51. And that's what I was covering about the trading chart. So as is right now, I've made 51 XRP. I've deposited that much money, or XRP. I've withdrawn that much, and I've got that much in trade. That's what my profit is. Watch that. You can download this free chart to see what your profits and losses are. And it's all formulated for you. But literally, 51 XRP as is now. That's what my profit is. But that doesn't say that I'm 51 XRP in profit on this trade. Where is this trade? I've lost it. Yeah, it's telling us I'm 14 XRP in profit, but I'm not. I'm 51 because I've already taken some off the trade. It's very important to keep an eye on your profits and your losses. But basically, when you're doing take a stop loss, that was the other thing I wanted to cover. So let's just say this trade's open, and again, once you've got your trade open, you've got your positions. You know, if you open a trade very low, your liquidation levels will be quite low. So if I've got a liquidation level, a low one, I try to keep the trade open. So I don't close it. I don't close it by the market order. I just take some profits off as the price rises, and then as the price drops, put some more positions. You know, over here, put some more positions in the trade. So your trade's open. Once you close it, you're starting again from scratch. So it's very important. If you've got a good opening position, you can long. You can trade long or you can trade short. I don't like shorting. You can make money, XRP or what have you, on the way down as the price drops. But again, look at the charts, look at the heat map, see what you think about price rising and dropping. But I kind of buy on the way up, sell on the way down. You can, like I said, short on the way down, but that's another story. Taking a stop loss, excuse me. So let's just say I want to take a stop loss, and that's my liquidation level, 2.5. Let's just say I don't want to lose all my funds, so I'll say, okay, when the price gets to 2.16, I want to take a stop loss. Okay, so I'll just go over here, and we'll go to details, and we'll go I'll add one, and I want to add a stop loss trigger. So I'll say when that price gets to 2.16. Yeah, that was right. When that price gets to 2.16, I want to close 50% of my trade, let's just say. So what's that? That's 28. You can do partial stop losses. So I can say, okay, if the price gets to 2.16, I want to close 20% of my trade. Let's just over there, 20% of the trade. So that would say when the price yeah, sorry, yeah. When stop loss, oh no, sorry, I did that wrong. 216. Was it 216? Yeah, sorry, there. When the price gets to 216, I want to close. Oh, sorry, that's the limit. I did that wrong. Yeah, that's better. So stop loss you can do by percentage of the trade or limit. So I'd say limit. So when it gets to the price, the limit price is 216, and I want to close 50% of the trade. Is that right? Oh no, I still haven't done that right. Trigger by profit and loss. There we go. I'm making a right mess of this, am I? 216. BitUnix is a little bit different because I'm used to trading on there. So we'll do that when the price is 216 stop loss, and we'll say I've done that totally wrong. Sorry. 216. There you go. So that would give me that would give me an 8%. That would the entire. Ah, right. Okay, I know what I've done wrong. Sorry. Partial, but entire position. That's why I've been doing it wrong. Take a stop loss. Trigger the price. 216. See, you've got to do your homework, and then basically, when that there you go. Yeah, entire position. Modify. So I'm taking a stop loss. 216. And then it'll give me 8%. 8%. So you can use the slider. That gives you a better idea. So when the price hits 216.92, I would make a 7% loss. So basically, I would lose 7% of my trade. I wouldn't lose it all, and that would, if I click confirm, stop loss triggered by change in percentage. Yeah, so that would give me a loss of 7-8%. I'm not going to confirm that because I don't want to mess me trade up. And basically, that would cover us if I didn't want to lose it all, because you could be sleeping, or you could be not watching your computer, and then a trade drops, bang, you've lost everything, gone. And when you hear people get liquidated, this is why they're getting liquidated. So leverage trading, like I said, if you're watching your computer like a hawk, or you're putting your take profits and your stop losses in there, definitely interesting, very risky, but it gets the adrenaline going, should we say. it's withdrawal successful, there we go. Yeah, so I did a withdrawal 44.80. You can see there the 44.80, which was that withdrawal. 44.80 was that minus the 20 cents the charges for the withdrawal, so that was the 45. So because somebody says, yeah, you're just making these numbers up. There's the withdrawal on the spreadsheet. So I keep my records, and but again, check out our video on the trading page for the spot trading. You can find that if you go to the videos on the trading page, free trading charts, network copy trade. This one, definitely do both. I tend to do spot trading for long term, very long term, and then me leverage trading for a bit of an adrenaline rush, and you can make some good income on there if you know what you're doing. Don't over leverage. Number one, 6.5x leverage is quite high. I would say start 1 or 2x leverage. Just start very small amounts, and have a bit of a play with it. But it's very, very interesting. Okay, I hope this video helps.